Well, greetings. I'm Danielle Smith, the president of Alberta Enterprise Group. And this week we're going to be talking about Bitcoin, blockchain, and miners. What are they and what should I know about them? Now, I got interested in the whole world of cryptocurrencies back in 2016. So I invested in Quadriga. And if you look up Quadriga, you will discover that they were an online trading platform. And Gerald Cotton, the owner, went to India, got colitis or something, Crohn's disease, I think he had, and allegedly died. But of course, that's when the whole thing collapsed and realized it was a bit of a Ponzi scheme. And so I don't know if Gerald Cotton is out there with an assumed identity, living high off all the dollars that he ended up taking in. But I did not get gun shy about cryptocurrency. So I'm still invested in different exchanges. I use Binance as one of the main exchanges for trading cryptos. I've got 3 different coins that I hold, including Bitcoin. And I use Coinbase or CoinSquare as a way of getting the dollars into the fund, because you have to get your Canadian dollars translated into a currency so that you can trade. Now, why are we even talking about this anyway? Is this for real? What is it? How do you create value out of thin air? Because I think the way that we tend to look at currencies is that they are created with government backing, with a central bank, and that is what gives it its value. So what gives a Bitcoin its value if it doesn't have a central bank backer? We're going to see if we can get to an answer there. The other thing that I'm interested in having a conversation about is the use case for how you would use the blockchain, what blockchain is, and why it is that it's important to have an alternative system to transfer value between different customers. And part of the reason I got interested in it is I did a bit of travel. I think one time I went to Mexico, and instead of being able to translate my currency or pay in Canadian dollars, they ended up translating it into American dollars and then charged me back into Canadian dollars. So I had to pay 2 transaction fees. And I thought, why can't there be an international currency where no matter where I go, I would be able to use it? Now, I don't think we're quite there yet with Bitcoin, but I think that was kind of the reason why I got into it in the first place. The third thing that we'll try to get into, though, as well, is that there's a group called a company called PV Mart that is working on investing in different communities. And one of the proposals that was quite interesting that had been pitched in my community was the idea of creating a Bitcoin mining center as a bit of an attractor and data collection that would then be a growth node for other tech industries in the community. I thought, well, I wonder how many other communities have this kind of pitch. What is a mining operation? They're a little bit controversial because of the amount of electricity they use. Elon Musk doesn't seem to like them, and so they're trying to green themselves a bit. But there's also positive aspects of how you could use this technology. I think we've mentioned before that there are companies who are looking at ways of catching fugitive emissions of methane so that it can be converted into Bitcoin. Far more efficient to do that and create value than setting up a new network of pipes to do that kind of capture. So I think hopefully by the end of this, you will at least have a better understanding of some of the different industries that are developing in Alberta and why. Maybe you'll see why it is that the blockchain or Bitcoin might be useful in your industry. We'll see if we can get through that in the next hour or so. So my guests, let me introduce them. We've got Art Matt. He is CEO of Nectar ACS in the Edmonton area, a longtime friend of John Liston, our vice president, and his collaborator. They've worked together on different projects, is Phil Harvey. He's CEO of Saber 56 Bitcoin Consulting Services in Dubai. He's actually in Dubai right now. I'll tell you right now, it's 7 o'clock at night, in case you're wondering if we've got him up in the dead of night. We don't. He's going to be able to talk us through some of these issues. Art and Phil, thank you both for joining me today.
You're welcome. Thanks. Thank you for having us.
So I think it's probably worth it to just understand a little about your history and what brought you to the issue of Bitcoin and Bitcoin mining. And then we can understand some of the use cases as we go forward. But let me first start with Phil, because I think you said that you've been in it for about 7 years. So tell us what it is that attracted you about Bitcoin mining.
Sure. So I just did the math. It was 2014 that I actually got into cryptocurrency itself. A buddy of mine said, hey, you should look at this imaginary token on the internet. So the conversations that everyone are having now, I had, 6-7 years ago. And it was very sketchy, much like, the situation you went through with Quadriga. My very dear friend Cam said, just go and put some cash in this guy's bank account that you've never met and that you've spoken to on an internet chat room. So I was like, sure, okay, I'll go do it, no issues. He'd already done it, so I'd already tested the water with him. And the forum or the means to buy Bitcoin, which is still common practice today, is a website I've forgotten the name of. Local Bitcoin. There we go. And the way that you would transact is you want to sell, I want to buy. I would upload a receipt copy of the cash that I've put into your account with obviously your details. Run home, message you and say, hey, the cash is in your account. And then I would upload that receipt to Local Bitcoin into, they have an escrow, and then Buddy at the other end drops off the BTC, some imaginary coins into your imaginary wallet on an imaginary website, none of which you can smell, touch, feel, taste. And then, yeah, you just have some numbers on the screen. And unfortunately at that time, so Bitcoin was around probably $500-600 at that point. I didn't understand the value of Bitcoin. I was told, and of course I conducted lots of research as to what I was doing at the time, that the coin I wanted to get into was actually Dark Coin, which is now known as Dash. So as soon as I had my $1,000-1,500 worth of BTC, I then went and shifted it straight into Dash through another series of applications I had to download and numbers and letters I had to remember, and then inevitably it dropped off the face of the earth, only to resurface some few months later at 60-70,000% increase, which was nice to see. But hindsight, I should have kept the cash in BTC, but obviously, at the time I didn't realize.
But why even do it in the first place? I mean, the way you've described it is exactly how people think about it today. It's an imaginary coin on an imaginary exchange, and you're exchanging with people that you don't know. And there's this risk of exchanges being hacked, and it's difficult to determine value. Why even do it in the first place? Is it just for speculation?
Why not? I mean, the golden rule of investing should be only invest what you can afford to lose. Lose means gone forever. So if you can afford to set $5 to $10, then that's what you can afford to invest. So that was the calculated decision I took at the time. And of course, I'd had a look at what the use cases were and researched the forums to understand a little bit, about what it was. And it was still very much in its infancy in 2014. The altcoins were then starting to take over. So I'd missed the initial bump up. $500-600 Bitcoin is crazy to think of now. But I suppose really the moral of the story is the conversation hasn't changed. I went through the same experience back then as what a lot of people are potentially going through now. However, my experience was without the industry that supports it, which is many billions of dollars now. You've noted exchanges.
Okay. So we'll talk then about what the value case has grown into in the intervening 7 years. But let me get Art in, so I understand how Art took an interest in Bitcoin and also in the mining aspect of it. How did you come to this issue, Art?
Yeah, thanks, Danielle. Much like Phil back in the mid 2015, 2016, I started to invest in Bitcoin and some altcoins at a very small level, a couple $1,000s. Went through the cycles, lost everything. A couple of rounds there, like I say, a couple $1,000s here and there. And then about a year ago, about 2 years ago, actually, we started to hear more about Bitcoin, and it was coming back up in value. And we started to learn about some different local mining operations, local people who were in Bitcoin, and myself and a number of friends decided to get involved in Bitcoin investing. in a small way, but as a group. And so we legitimately went in together as a group and put a few dollars in and started to invest and got in at the right time, early fall, about a year ago right now. And so that got us involved locally here and met Phil locally as well through the hosting facility we were in. And then Phil and I got to know each other, and here we are today in terms of financial partners in mining operations from a construction perspective and hosting and mining acquisition.
Okay, so over time, Phil says that the business use case developed. And so my initial attraction, as I told you about Bitcoin, was getting rid of that, pardon me, getting rid of that middleman, that transaction intermediary of the currency exchanger who charges quite a large fee to change from Canadian dollar to US dollar to Mexican peso. So my idea was I'd like to be able to transact directly. And so that's how I kind of think about the use case, is being able to do a peer-to-peer transaction without using the intermediaries of the banks and the currency exchangers and the cost associated with that, but also having a way to validate it so that if I'm transferring money to you, you know that you're going to get it. And I know that the transaction is going to work. And so tell me, so that's how I think. Sorry about that. That's how I think about the use case. And I'm wondering if you can either elaborate on that, or if I'm being too narrow, or if I've kind of sort of touched on why it is that it's so attractive.
Sure. The first issue that we'll come up against is Bitcoin has the potential in one of its many guises to remove what is essentially a $700 billion industry, which is the remittance industry, which is what you've just spoken about there. So moving money globally. There's obviously a number of different parties involved. You have your bank, a remittance bank, and then obviously the bank in the other country as well as all the different currencies that you need to navigate. And for ease, a bag of chips costs the same here as it does in most places around the world. So why can't I pay with my peso here and you pay with your British pound? So Bitcoin was, well, we don't know why it was invented or by whom, but one of the use cases is to remove remittance entirely by no requirement for any intermediary to be involved, including accountants, anyone that needs to have a handle on that cash moving from my account to your account is completely removed by the blockchain, with it being fully recorded, and obviously your address being unique to you, as is my account number being unique and registered to me. So, and it's also an instantaneous process and transaction. So if I want to transfer, British pounds to Canadian dollars, it's going to take 3-4 days potentially to, bounce around and whatever. Whereas with sending coins on the blockchain, it can be a matter of seconds to a matter of minutes to send anything from, a couple of dollars all the way up to many hundreds of millions of dollars. The amount does not matter how much you want to send. So it's obviously pushing against a narrative that we've been set for many, many years, which is the banking system. And the banks manage a lot around the world, if not everything. So, the use case is there, certainly for Bitcoin, but there's obviously external powers that will prohibit that from really taking place in certain locations, as well as the fact that Bitcoin is finite in its supply. Unfortunately, the US petrodollar is not, as we're seeing weekly, of trillions of dollars just being printed into existence. And one of the points that you touched on in your introduction was, you wanted a coin that you could use, and is it backed by anything? Well, the US dollar in 1933 moved away from being backed by gold. So essentially what happens there is the US government says this dollar is worth $1 because I say it's worth $1. Well, great, but what happens if your economy sinks? That dollar's worth diddly. So, with a finite supply, or with the dollar not being backed against gold, it has no real intrinsic value. It's worth what someone else says it's worth, which is, to a point. So is Bitcoin. People place a amount of value on that, but it has use cases for that, such as remittance and obviously a method of payment. But it's finite in its supply. Only 21 million of these coins will be created, of which you can use fractions of, obviously, to go down to the lowest denomination to move cash around. So, it's very different to what we're accustomed to, unfortunately, at the moment, because we don't have free markets anymore. We don't have gold-backed currency. So, is it the new money? Depends how much people want to mess around with it. If a government decides to create its own cryptocurrency, then no, it's not. It's just bait and switch for another form of paper currency not backed by anything.
And I will get into that a bit, but I want Art to tell me what the use case is from his perspective, because I've got a bank account in one bank and one with another. And so when I transfer money between the two of them, it is instantaneous. There is a limit to how much I can transfer, of course, on e-transfer. And sometimes there's a limit. They hold it just to make sure for a period of time that the money arrives, I guess. But I think most experiences people will have is that it appears instantaneous. It appears like we already have very fast electronic or digital currencies. But does the challenge come in when it is that you're trying to do international business? Is it that my bank in Canadian dollars has to convert to a different currency, send it to another bank, which then has to get it to the recipient, and all the middlemen in the middle? Is that really where the advantage of this is? Tell me, Art, how you see it.
100%. As I mentioned in the earlier, Phil and I are in business partnership. Some is a supplier consumer relationship. We supply product, construction product, the mining farm infrastructure to one of Phil's companies, and the payment of that we transact in cryptocurrency fully. So we are transacting instantaneously as Phil mentioned, it's certainly not several $100 million, but we transact in high volumes of money for services rendered. We convert back into Canadian and US currency on this end, but certainly, and there is facilities and mercantile facilities, institutions that do that for us. But between the two of us, we transact in cryptocurrency. So we are already using it for its intended purpose.
You said something interesting there, because what I think that's maybe the disconnect that people have is, what is the use for it? So if it simplifies the international exchange, and I think you described well how it would simplify that, why wouldn't you keep it in the original cryptocurrency? Why don't you keep it in Bitcoin, especially since you actually see there's quite a bit of price inflation right now? You might be able to make a little bit of money off of it. Why would you want to convert it to the Canadian currency? Because I think that's where people get disconnected. Why do I want to hold this thing if when I want to go down and buy a pizza or pay my employees or buy a piece of equipment locally, I can't find a person to transact with that? And so connect that for me, if you would.
So we convert to fiat, let's call it, whether it's Canadian or US dollars, to be able to pay most of our suppliers who supply us with infrastructure for the work that we do, the input, hardware, the goods, whether it's electrical equipment or whatever the case may be. Some of those suppliers themselves are supplying to the crypto industry, and some of those suppliers themselves will take cryptocurrency as payment. So we do transact outbound as well in crypto as we can. It saves some fees in exchange in the currencies, which are fairly minor, and it does give us the ability to temporarily, let's say, ride the wave of crypto going up or down. And then again, at a personal and a bit of a business level, we also have the ability to pay third parties for mining hosting in crypto. So we are already living the world of cryptocurrency as transactions in both directions, both personally, myself, and in our business.
Interesting. Let me put it back to Phil then. What are you seeing internationally? Are there more opportunities to maintain once you've done the transfer in Bitcoin? Are there more ways to transact with companies when you're paying your employees and paying suppliers from an international basis? I'm wanting to know if this is where the industry is ultimately going to go, where Bitcoin becomes a real currency that can be used for all transactions, or do you think it'll just be used as art is using it right now?
I mean, look, there has to be a liquidation event at some point. So gold, oil, for example, these guys mine it, pull it out of the ground, and it has intrinsic value, but they can't pay for goods and services with a barrel of oil. So they have to liquidate that into a fiat currency to carry out their business. It's exactly the same as what Art and I are doing. We are using something that has a store of value or has value associated with it. And unfortunately, we need to liquidate that into a common currency for other people to then, pay for goods that we use with them. On a smaller, let's say, retail level, there are groups out there that will supply a debit card or a crypto-backed credit card where it's instant. So you can preload that card with your funds. It's stored separate and outside of an exchange. So the issues that have unfortunately become common practice amongst some of the lesser, shall we say, gentlemanly-like businesses that have entered into the crypto world, your funds will not be stolen or misused. And I can go and pay for goods and services with my debit or credit card that's topped up with crypto, and it's an instant switch there. So it's only the same as if you were to use a debit card from BMO and you want to come and buy something over here. It's the same process. It's in Canadian dollars in your account. You tap it and it converts it into dirham, and that's it. You're away. So it is getting easier, let's say, to transact with cryptocurrency. If you like, the Bitcoin of the world is like trading shares or stock or having assets with value associated with them. You can't buy something with a house, but you can buy something with the proceeds of that house. Same with Bitcoin. You need to liquidate that Bitcoin in order to buy something.
So it's more like a store of value. And I wonder, Art, if you can give me some sense of, and maybe this is a better question for Phil, but let me put it out there in any case. So you mentioned the $700 billion industry of bankers and accountants and those who are transacting, lawyers, central bankers. It seems to me there's a lot of interest that wouldn't want to see this become the standard for transacting business. And from time to time, you see nations come forward and say, we're banning cryptocurrencies. I think China is cracking down on it too. I thought they were, but they're also creating all of the equipment for it. So I'm a little bit confused about where China is going with this. But I'm trying to, I think the big question from a perspective of risk is, if you get involved in holding and transacting in this mechanism, can't the Canadian government just come in and say, we're not going to allow that anymore? Or is it outside the system of government control? Give me some sense of how you assess the risk, Art.
I asked Phil.
Okay, let me throw it over to Phil. Phil said he wasn't going to bail you out on any of my questions, so
just dropped me straight in it. I wasn't paying attention, so you're gonna have to answer it now.
No, I said I asked Phil for what's the risk. No. So how do we? I'll just answer that. I truly will answer it. Being close to the industry, which I am, obviously, because we're spending hundreds and millions of dollars in expenses. We're creating employment in Alberta. Make a note of that. And we're close to the industry. We understand the industry, and as we get closer and closer to it, we also better understand the risks. I think I mentioned earlier, I'm in the construction business as well. We're at risk every day in the tens of millions of dollars. We understand the construction industry. Other people look at me and say, wow, how do you do that? Isn't that risky? How do you put a price to whatever you're doing and building for infrastructure? It's much the same way with crypto. If you understand it, you understand the retail market that maybe is more emotional than the real institutional market, let's call it. Yeah, so we assess that risk, and the real risk for us is when we do get paid in crypto from a company, one of the companies like Phil, then we assess the risk of either hanging on to that crypto or liquidating back to fiat. So yeah, it's a daily thought process. It's a bit of an accounting nightmare, I will tell you. Multi-currency accounting in general is a bit of a nightmare. You get an invoice for $100 in US dollars one day, and then when you go to pay it, a month later, well, the exchange rate has changed, so what you perceived as good value may have gone up or down. It's exactly the same way with dealing with crypto. It's just another currency that may go up or down between services rendered and when you pay for those services.
But is there a risk, because I've seen this in other jurisdictions where the government doesn't officially condone it, would there be a risk that you don't own all this Bitcoin, and if you wanted to transfer it back into Canadian dollars, that the government could step in and say, we don't recognize that transaction? Or is it because it's peer-to-peer, it's kind of outside the realm of government restrictions? I'm trying to figure out whether the system can survive if you end up with a hostile government.
Yeah, go ahead, Phil.
Yeah, I mean, look, if you wanted to pull the plug on this industry, it would be by restricting the movement of fiat into or out of cryptocurrency. So through the exchanges or closing the exchanges, and then obviously the banks. But, crypto was around before exchanges existed. People will find a way to transact, whether that be for cash itself or for other forms of commerce. So you're also looking at globally a complete ban on cryptocurrency, and if that was to happen, then that's alarm bells for what kind of world we are living in if they're trying to ban something as progressive as what this is.
Well, let's explore that a little bit, because I feel like the printing of money in every jurisdiction, and in particular America, is that at some point people are going to wake up and say, maybe the American dollar isn't quite the store of value that we thought it was. And then with the parallel effort to try to diminish the world usage of oil, the petrodollar connection that backs the US currency also seems to be a little under threat. And so I've been listening. Again, you don't know how much of this is in the works versus how much of it is just perspective of what could happen. But there is sort of a notion that, yeah, we need a global currency for the reasons that we've been talking about, but it would be a basket of currencies that would be controlled by some sort of central government agency or central banking authority, maybe through the UN, I don't know, or the World Bank. And then it would be a replacement for what it is that Bitcoin has created. Now, I don't know if there's enough collaboration between the nations where that would actually occur. I don't know how much threat the US currency is under for no longer being the international currency. But I have observed that there have been some side deals between China and Russia to be transacting in energy without having to use the US dollar as an intermediary. And so I'm just wondering, from a global perspective, how you see all of this shaking out, and how quickly you would see this moving. Am I barking up the wrong tree, or am I seeing some trends that are actually happening?
No, I mean, of course, anything is possible. Let's discuss that in view of COVID. That was the world's chance to come together and work together to figure something out. Whatever the origins were, how things came about, separate discussion. But the world showed there that it was every man for himself, and no one's got a clue about what's going on. We look to the government to assist, and not one succeeded in that task. If they were private entities, they would have gone into administration and liquidation overnight. However, the government's supposed to provide for us and give us the direction that we need. Will people wake up one day and figure out that the US dollar is going down the toilet? Yes, probably. Will they do anything about it? No, probably not, because what's the alternative for people? Unfortunately, people are lesser educated around these things and will just look for advice and guidance from Instagram or TV or radio and not really look at standing up on their own and figuring out this mess for themselves. They're just looking for, someone to give them the answer. Well, unfortunately, it's never going to happen. So could governments single-handedly ban cryptocurrency and then, bring in a new world order and their own currency? Yeah, sure. But I think the chances of that happening are slim to none. And remember, if everyone apart from one country cancels crypto, that one country will benefit, because then everyone that holds crypto will go to them to liquidate. So, we see it all the time with OPEC and the oil prices in the Middle East. Well, we're not going to produce any more oil. And then it gets produced again, and then the US has to suffer and whatever. So it's certainly a conversation that could be had, but not within the realms of reality, I'm afraid.
All right, now let's talk about what mining is all about, because and I'll go over to Art first, because the way I think of mining is I think that if we're going to look at Bitcoin now as being a store of value like gold, we mine gold. Therefore, it makes sense that you would mine Bitcoin. Or oil, you mine oil. Certainly in the case of oil sands, drill it in other cases. But if you're going to look at it as a store of value, then it makes sense to use the term mining. But when you think of mining, you think of heavy equipment and moving earth and bobcats, and that is not what you have when we're talking about Bitcoin mining. So you're going to have to tell me what a Bitcoin mining operation looks like.
Art, I'm taking notes. I've taught you a lot, buddy. I'm expecting gold star right now.
So we'll use a mining facility that we're constructing right now. A Bitcoin mining facility is a facility that has thousands, tens of thousands, potentially of computers, ASIC computers that are specifically built, in this case, for Bitcoin mining. And the miners are solving the ultimate algorithm of creating the Bitcoin and also doing proof of stake or proof of work of Bitcoin transactions. So the miners themselves are working collectively together in a pool. So the miners in one farm, if there's 20,000 miners on one farm, the miners would sit on shelves in a building or in containers, modified shipping containers. They would work together with other miners around the world to collaboratively work at solving the ultimate algorithm that creates a single Bitcoin. There are today 900 Bitcoins per day that are, I'll use the word, allowed to be created within the algorithm. And Phil can fill in the blanks later. Every 4 years, that ability to mine is halved. So in about 2.5 years, it will be 450 Bitcoins created every day. And it gets more and more difficult as time moves on. Computers get more and more capable. Other computers get less capable. So more computers come online. Other computers go offline due to inabilities to do the mining. And I'm no mathematician. So I best explain to some of my lay friends what mining is, to think of a transaction like pi 3.14, which is an infinite number. Pi times pi is almost impossible to calculate, but if it was, it would be an algorithm. And for, again, the person who knows nothing about crypto mining, that's what these computers are doing. They're trying to solve the problem of a multiplication like that, or essentially the algorithm of Bitcoin mining. It's a real kind of very simple lay way to describe what mining is. So,
well, I like the way you described it, because there is that sort of two-part process, is that they're simultaneously verifying the transaction. So that's why it's sort of taking place peer-to-peer. I still don't know if I fully understand how you can create an unsolvable, like what this algorithm is. If it's, you described it as a bit of an unsolvable equation, and if it's an unsolvable equation, then if you can't get to the end of it, how do you end up creating these 900 Bitcoins a day? Is there any other way for us to kind of wrap our head around it? I always try to find something that it's just like X in the real world, but this seems to be pretty hard for me to wrap my head around what it's like. Maybe I'll pass it back to Phil and see if he can fill in a bit.
Okay, so imagine, if you will, we have an accountant, and that accountant needs to record the transactions that take place within the business, and they have Excel as their very basic form of accounting. So plus, minus, every day goes through. At the end of the day, they close off that ledger and they open up a new ledger for the next day. Now, imagine, if you will, that it's password protected between every single day. And instead of that password, it's an algorithm that they need to solve in order to open up the next day's tab on Excel. And their reward for opening that new sheet on Excel and for carrying out the work is payment. That payment is in the form of Bitcoin. So each second of the day, every time transactions are processed, it's the same as Visa and MasterCard are doing. They're just processing a transaction and it's recorded somewhere on your bank statement if you choose to download it or whatever. This is recorded forever on the blockchain to see what transactions are being processed without human interaction processing that transaction. It's done by robots, essentially computers. And the reward for those computers, or rather the owners of those computers, is the Bitcoin that are produced every block. So a block is roughly produced, a ledger is produced every 10 minutes. So it's all the transactions that took place in that 10 minutes, as well as to print every transaction that ever took place up until that point. So they're being paid essentially for recording information, and that's as simple as it can be.
I think that helps. Okay, so then Art, tell us about how lucrative it is. I mean, because if you say that you have a massive investment in computers, then also the massive investment that you need to operate them in the electricity, and we'll talk about that, with a decreasing number of coins that you're able to chase after, and also sounds like obsolescence with the computers. How big an investment do you have to make in order to be a viable mining operation?
Well, I can speak to it from a personal experience side of investing at a retail level in miners. How lucrative is it? We seem to have hit it at a good time in the last 12 months. We're looking at a payback in about 8 to 10 months, and then a continuous mining after that, production of Bitcoin, of reward, let's call it. That will occur for probably the next 3 years for us at the retail level for what we've done, until the computers we own, the miners own, become redundant and less competitive in the environment to create or to create the transactions or verify transactions. So the couple of dozen miners that we own right now are part of worldwide pools of millions of miners that work collectively to produce the reward back to our small group, our investment. So from a big picture level, at Phil's level, where they set up the mining farms and have tens of thousands of computers, it's essentially the same risk and reward at that level, the payback, as the investment at that level with let's say corporately owned miners, is essentially the same type of investment we would have at a retail level, except at a retail level we're paying a bit more, which is reflective back again on the reward that we get. So it's kind of the same payback timelines. Again, obviously a lot of this depends on the current value of crypto, of Bitcoin in this case.
So Phil, tell us what's happening in the global market, because if that's the case, that you make a massive investment, it takes 8 to 10 months to pay off, but then you have obsolescence 3 years later and have to do it all over again. That would imply that, I mean, it's a pretty high cost of entry, and it also implies that you would likely see fewer and fewer miners over time, that it becomes harder and harder to enter into this field. Is that what we're actually seeing?
Possibly. With the entry into mining, it's something that you obviously need to select the right entry point and the level of entry. So Art has entered into the space as a retail miner with a small group of miners themselves, machines. And with that, the economies of scale don't tend to come in to appreciation. When you're spending tens of millions of dollars, then you will obviously get a cheaper machine price. Again, Art will be paying more for his operation from an OPEX perspective, his power, because he hasn't built the infrastructure. He's essentially borrowing it from somebody else, and they're charging him for that. They're charging him rent on the facility. Whereas if you're mining at scale, you are then building out that facility yourself and thus reducing, the cost to mine. So it was the point that machines eventually would, become obsolete due to their efficiency. So efficiency in this world is the amount of power that they draw versus the amount of computer power, hash power, that they produce. So the latest machines on the market are actually at such a level now where they're that efficient, they will be able to mine down to very low revenue figures and still break even. Okay, your return on investment period will extend, far beyond what you'd be comfortable with, but you'll make money. Whereas the machines of old would actually lose you money if you ran them because they weren't as efficient. So we have seen a shift in recent times, the last 6 to 12 months on more efficient machines. So that begs the question, well, why do I need to buy a machine past the one that's just been produced? Well, why do you need to buy a car past the one that you've just purchased? Because you do, because these guys that build the machines will obviously keep developing, keep producing. They won't want to produce the old model because they can't charge as much as what they can do for a new model. And it is, it is very lucrative. Over a, we just finished a proposal for a client. It was a $50 million entry into the market. Over 60 months, that would net them $320 million, plus the retention on the asset that they still have, which you could value at maybe 15 million after 60 months. Revenue in total, gross, was around $620 million over 60 months. So extremely lucrative, but it's potentially, high risk, hence the high reward. And it's relatively the same figures that a retail investor would make from an IRR, ROI perspective. It's the same percentage. It's just the value is different depending on what you put in.
So go back to Art then. I'm not getting the sense that you just walk into Staples and buy a bunch of Acer computers. So how do you actually get the equipment that you need and get the expertise to wire it up and then have it operating? Can you walk through a little bit of that?
Yep. And I guess I can speak to two ends of the scale. At a very retail level, there are mining hosting companies online that you can go sign up and say, I'd like to take 4 miners. You'll get your miners delivered right now for a higher value, or 6 months from now for a much cheaper value. So if you're prepay, you'll have to wait some time to get a cheaper miner. So you can sign up for 4 miners, you can sign up for 40 or 400, and then pay a monthly fee for the hosting. The hosting includes obviously the ROI for the hosting facility, and also the power consumption. So, and that's all built into a monthly fee per miner, or almost an hourly fee per miner that turns into a monthly fee. So the alternative is as we were dealing with Phil's companies here, you can buy bulk as an investment perspective, so quasi-retail institutional, so to speak. Or you can, if you have access to power or access to money, go to a company like Phil's and have a full facility built from right from the consulting process all the way through to the construction, the operations, the maintenance, and everything of that facility. The one thing to note that just from being involved in facility construction, about 3/4 of the investment is the miners themselves. So when the miners become redundant, the facility is still there. It's like putting a new computer under your desk. Your desk is still there. You just swap out the computer and carry on. But like I say, the cost of the miners is about 3/4 of the full investment to build a full facility.
Talk to me then, Phil, about I'm wondering if there are different jurisdictions that would have a different comparative advantage based on electricity costs. I mean, I wouldn't have thought that Alberta would have been perceived as a low cost producer of power. I would kind of look at Quebec, for instance, as a low cost producer of power, or anywhere else that there's hydro, maybe Manitoba or BC, or perhaps France, where they've got low cost nuclear power. I'm just trying to figure out how electricity costs and electricity source factor into this. I know Elon Musk raised some concerns about the greenhouse gas footprint of the Bitcoin mining industry, and I don't know if we've seen any response to that. But maybe you can tell me how that gets assessed for where mining operations get set up.
Sure. So your two main inputs really are the machine price, machine cost, and your power cost. To build the facility is relatively similar prices globally, to be honest. But the power cost is obviously something that you focus on because this is your main operational expenditure. Your manpower, systems, software, anything like that is really fractions of the overall cost of power. And the cost of power is, if you go in hydro, you obviously got the recovery of the dam cost, which is obviously a big infrastructure cost that you need to recapture, plus the infrastructure to pull that power from where it's generated, the dam, through the network, again, cost associated, back to your mining operation. So hydro tends to be still relatively cheap for sure, but it's that recapture of capex for another party that's obviously included in that. The US, Texas has some of the cheapest power. This is predominantly fossil fuel powered, which then leads us on to the conversation with Mr. Musk. We need to be mindful and cognizant of the fact that we are destroying the planet through the use of fossil fuels and ripping stuff out of the ground and not replacing it, trees or fish or whatever. And mining should be the same. Where we can and where it makes sense, we should use renewable energy sources. We have a lot of infrastructure that's been put in for these that is underutilized, and we have an industry that is able to take vast amounts of power and turn that into revenue. We've already spoken about liquidation events from the crypto that we create into the fiat currency. I need to pay the utility company for that power that they've generated for me to run my operation. So the cash comes back in the system. It's not as if I'm stealing the power and it's ill-gotten, that where my gains are from. I'm paying for it. So if I'm not saying I'm the white knight here, but if I didn't come along and build my industry that only takes power, I wouldn't be paying you $500,000, $600,000, $700,000 a month for power for a relatively small facility. Some of the facilities that we run and manage are many millions of dollars per month just in power, and obviously that goes into repaying the infrastructure that's been borrowed from the taxpayer. So we're paying back into the economy. For sure we should step away from fossil fuels, but we should step away from fossil fuels irrespective of mining. It should be
so. Phil, we are, as you probably know, in Alberta, a pretty large producer of fossil fuels. I think we have a bit of a different vision in Alberta.
Yep.
That if we couple the carbon capture, utilization, and storage with the use of fossil fuels, then you've become net neutral. And so there is another path forward to reducing the impact on the environment without switching everything over to solar and wind. Because look at solar. Yeah. I mean, producing these crystalline silicon panels using coal power and Uyghur slave labor in China isn't exactly the ethical low environmental impact that we're all hoping for. And same with wind turbines. I mean, if you've got to use a bunch of cement and steel and fiberglass, you're not really net neutral either. So I just want to put that out there, that I think that there is a way for hydrocarbon fuels to have a lower environmental footprint and still be a viable source of energy. Because I guess in the volume of energy we're talking about, I just don't know that an intermittent source of power like solar and wind, I think we just want to be realistic. I don't know that could actually fuel this entire industry. So maybe you can tell me why you might see it a bit differently.
No, I mean, look, for wind and solar, absolutely. I mean, it's not something that we can survive on, operate on. It would need to be coupled with another energy source. Now, if we're connected to the grid is obviously fed by a number of different energy sources, of which, it's all mixed together, and then you're just getting it from the socket in the wall, essentially. With the carbon capture, it just needs to be done in a way that it's realistic, and that, those carbon credits are actually offset, and it's not just a paper shuffling exercise. If that's the case, then for sure, we should be looking at utilizing the infrastructure that we've put in, whether that be a coal mine. We can't just close down a coal mine just because it's become, dirty to run and operate. There's obviously resource there, there's infrastructure there. Let us use that and find a way to offset those carbon emissions another way if we can't do it directly on site. But let us use that resource. The same with stranded natural gas. Fine, it's already there. You've put the infrastructure in. The infrastructure wasn't brought to that site to, extract it and put it onto its intended purpose. So let's set up these micro operations at stranded gas sites. Let's do the carbon capture. And let's look at, solving one or two problems rather than, carbon fuels are bad and you can't use them. And mining's also bad because it uses power. I mean, it doesn't work.
Let me put it to Art then. So tell me how you make the cost case, because one of the biggest things I hear from our members is the cost of electricity, especially when you add in distribution and transmission charges. So it wouldn't have been immediately obvious to me that we were a low cost source of electricity to make mining operations profitable. So what is it that that we don't know?
I think that the acquisition and the seeking out of sites to host crypto farms is only successful when the power already exists, as Phil has alluded to. We can't go into sites where we're creating the supply of the power, or building infrastructure to create that supply of power. It should already exist. Stranded gas wells is a good example. Substations or power supply to non-operating paper mills is another example where that power can be consumed. The infrastructure is already in place. There's some diversion of the power in the grid back to that facility or that location, but that infrastructure to supply the power is already there. And that's where the facilities are most successful.
That makes sense. Okay, Art, tell me a little bit about the complexities when you're talking about municipal zoning and approvals, because it's not all just clear sailing when you want to set up these operations. There have been some hiccups in some places. So is there any need for regulatory change to allow for more municipalities to consider doing this, or more entrepreneurs in municipalities to consider doing this? What are some of the barriers?
Yeah, the only thing I can speak to is the local awareness or experience that we have in that if you are using stranded gas wells or a stranded gas supply, there needs to be a regulatory environment or approval process for using that gas to produce power for commercial purposes. And also there is a complete awareness of the sound created, the noise created from a mining operation. A mining operation that has tens of thousands of miners functioning is extremely loud. So that is a really basic awareness that you can't be near communities and those type of things. As far as municipal regulations, I can't speak too much to that. Maybe Phil can a bit with his experience in seeking out hosting facilities. But primarily, it would be an assumption that if the power supply infrastructure is already in place, that would be the first blocks to check, and then also, usually that power supply is in place in industrial areas where noise bylaws, noise issues wouldn't be a problem. There's no real other pollution other than the noise pollution from the mining.
Talk to me about how loud it is. I mean, I guess I'm sitting here in front of my computer. I don't even hear it humming. So I'm just wondering why it's so loud. Give me some sense. Do you have a decibel level that you compare it to? Is it like a jet engine?
No, it's around about 75 decibels is the machine. I mean, they're small fans that are, spinning at anywhere between 5,000 and 6,000 RPM, and every machine has 2 fans at the front and 2 fans at the rear. So obviously, if we've got 10,000 machines, that's 40,000 fans that are spinning, and it's a very high pitch noise that obviously comes out of the farms. To discuss the regulatory stuff, I mean, we are an industry the same as everyone else that needs to set up and establish a new business. I can't just go and build a warehouse in the middle of a field just because I've got power and I signed a contract. I need to go through the process. I need to go and get a building permit, get an approval permit to operate. I need to open a business. I need to, meet with certain stakeholders and make them aware of what we're going to be doing. I need to assess the local area. Am I going to impact that from an environmental standpoint, from a municipality standpoint? So it's understanding that process and then following it the same as everyone else has to do. I mean, there's no shortcuts just because we're in crypto. So providing that's followed, everything will work out fine. And that's something that we've found, is that because of the delta in education within this sector, whenever you go to set up a new facility somewhere, and keep in mind the facilities we're building are anywhere between 20 and 150, 200 megawatts. I mean, these are large installations. If you think that 7 megawatts will power around 20, 30 houses. So this is large scale. But whenever you go to set up one of these places and you meet with the county or whichever the municipality is that looks after that certain part of land, they're always intrigued and interested and want to know more. It takes an education session, that open forum, ask the questions, and as soon as these locations understand the investment that goes into these places and the jobs that can be created, and also the amount of cost it takes to run one of these operations, the paperwork's signed very quickly because they understand it's needed for their community.
Okay, so I can understand that you've got a footprint, and so you've got an industrial operation, which is pretty low to service from a municipality point of view. So I kind of get the property tax issue there. But talk to me a little bit more about jobs, because the way we've been discussing this is that it's the computers doing all the work. What kind of job creation comes out of a mining operation?
Well, I'll talk about the mining part, and then Art can talk about the infrastructure part.
Yeah.
So from running the operation itself, typically what we work on is one individual per 3 megawatts roughly of power, and they can manage those machines. Again, let's go back to the accountancy analogy. Just because I've got a team of accountants and they all know what they're doing doesn't mean I don't need a senior accountant to manage those. Each one of these machines is akin to an employee, and the employee may not show up for work. I mean, the machine's not going to grow legs and walk off, but it could switch off. It could have an issue. The fan could break. The power supply could bail out. So they need to be checking these facilities from a health and safety regulatory perspective, from an operational perspective, making sure that there's adequate airflow. It gets warm, so you need to make sure that the fans work, the filtration systems work, the alarm systems are there, that the data systems that support are working, that the transformers have been serviced. So the job creation is real. We cannot, Amazon automate the whole process. It's just not possible. They require assistance. So, from the operations perspective, jobs are absolutely created. And then Art, if you want to just note some of the stuff that's obviously being built with Nectar and the jobs that are created there in the industry.
Yeah, go ahead, Art.
Yeah, so I mean, we're in there currently today, building, prefabricating a facility that will get shipped to the U.S. For a mining farm with more to come. And we've created jobs, about 25 jobs right now, welders, electricians, laborers, fabricators, construction equipment that's been purchased, rental of facilities, warehouses. So yeah, it's a legitimate, and it's in the millions of dollars in terms of what the farm is investing, the hosting farm or the hosting company investing in the infrastructure that is needed to build that farm out. And we're the starting point, that we're the key player in building that whole infrastructure for that farm, and created these jobs not out of thin air essentially, but yeah, essentially from a new industry.
Or maybe tell me, now that you've kind of created that as, call it like an anchor tenant, is there any other collaborations or business attraction that might happen in the same area? I'm kind of thinking of this as the development of a new industrial park, if that's the case. But maybe it isn't, because you're already centering in places where they have pre-existing infrastructure. Are there some synergies that allow you to be a catalyst to attract other types of businesses?
In my case directly with Nectar, we are building infrastructure. Nectar traditionally is a software company. We're also going to be providing the data management platform to run the facility. So we have two separate contracts. So there's a real synergy there in that, and I wear many hats in our capabilities to do the construction work in my construction background, but then also to apply the software platform that we've developed. And Phil and I are now in partnership to market that software platform across the world to other mining operations, mining farms, as a consultancy and as an operating system. And then from this anchor project initiative that we are on, we're also now across North America and potentially overseas, also in the early stages of building out facilities, prefabrication of facilities, modular facilities that we get shipped out.
Amazing. Okay, let me ask a couple of questions. And Phil, I don't know if this is in your wheelhouse or if this is something that we would ask to a different expert. I've got somebody else coming on to talk about some of the other altcoins probably next month. But Adam's asking, do you see, I call it Doggy Coin, DOGE coin, but I noticed that in the mainstream press, they call it Dogecoin. But I think it actually, its history was that it was a joke coin, wasn't it? It was named after a doggy. That's why you'll have to tell me if I'm correct. I mean, you mentioned Dash, but I thought DOGE coin existed as a bit of a legacy coin around that. And then Monero as well. Someone's listening from Russia saying, is Monero really decentralized like Bitcoin? I don't know if you're an expert in either of those two coins, but maybe you can comment on that. If everything we've been talking about is similar to some of the other cryptos.
Yeah, so we have proof of work and then proof of stake. So a lot of these coins will follow, or these coins will follow that narrative. So proof of work is all about mining. So a miner has to work in order to generate that coin, whereas proof of stake is different. So, are they decentralized? Well, yes, to a certain degree. Mining was supposed to be decentralized, but what we found was that when miners shut down, that around 50 to 60% of the global hash power, so the global computing power, the global mining network, was actually situated in China. Well, that's not decentralized. That means that half of the hash power is in one location. There's a lot of use cases for these coins. Monero is an anonymity coin, an anonymous coin, whereby your transactions are supposed to be untraceable. So you cannot track where money has been sent, much like Dash Darkcoin was supposed to be from when that was incepted. There are coins out there that have zero intrinsic value, not to diminish the hopes and dreams of Dogecoin holders.
So it is Doge, but isn't it a picture of a dog? Isn't that one of its symbols?
It is, but it was from a meme that was created for this dog. I think it's a Shiba Inu dog, I believe. But anyway, it has value for those that hold it and that believe it has value, which you could absolutely say about Bitcoin. However, it is the original. It is the first, the one and only of its kind. Everything else is a copy to some degree of that. There's obviously, less speculation surrounding Bitcoin than there is some of these other alternative currencies and tokens, as well as a larger use case and ability to use Bitcoin through trading, through exchanges, through ATMs, so on and so forth. Whereas, the other coins don't necessarily have access to the bigger exchanges and don't have the use cases or ability to be used as a, exchange of currency.
Okay, I will do a follow-up on that one to get into some of the other altcoins that might have some value. But just in wrapping up here, Art, I wonder if you can give me your sense of whether you think there's a lot of opportunity in this industry and how long it will last. Because as Phil has mentioned, at some point it comes to an end because we will have 21 million Bitcoins produced. And so there will be no more market to produce Bitcoin. So if I have this right, I think that's somewhere in the middle of the 2100s. I thought 2040 is sort of the target date for when all of the mining takes
2140.
place. So we've got a pretty good run here of being able to stay in this industry for some time. But give me some sense, Art, of what you think the opportunity might be.
I think, and if you're asking opportunity, generally speaking, not personally in the work that Phil and I are doing together, I think that because the quantity of Bitcoin is finite, again, much like gold, which is difficult to get, I think the value of Bitcoin will continue to increase as more money keeps going into the Bitcoin. As far as the mining in 2140 and the difficulty and all of that is relative. It all balances itself out. As it becomes more difficult, the miners become more capable. More of the less efficient mining operations will shut down. More efficient power sources will, more cost-effective power sources will continue. It all will continue to balance itself out moving forward, in that the opportunities will still be there. It will just be more or less zeros in the proceeds. But from let's say from a fiat return back to fiat perspective, I think the opportunities will continue as more institutional investment, the hedge funds and all of the different institutional investors that get into crypto and recognize the store of value. Again, as Phil mentioned a while ago about the U.S. currency and the Canadian currency, the same, is being devalued every day. We perceive our devaluation as prices going up or inflation, but really it's our buying ability that's being eroded. So as a store of value in crypto, that's not going to go away, and we can see that today. Even as we speak, the value of Bitcoin is rising. It does go up, it goes down, but as a general trend, it is rising, and more money is globally is going into crypto. So the opportunity, I think, is there for the next number of decades, as long as I guess the governments of the world don't completely collaborate together and ban it outright. There was a thing I saw the other day that said if all the governments get together, then Elon Musk will move the mining operations to Mars. So there's always still hope that we can go to Mars and mine from there.
They'll use helium-3 or something as the power source for it, so he doesn't have to worry about greenhouse gas emissions. Let me put it back to Phil for a final comment, because that's what I've wondered is, what does the end game look like? Now, you've already told me about this already planned obsolescence in the way the computers work. So it's not like you're going to have a huge amount of investment that at the end of it gets stranded, because it's sort of getting stranded every 3 years. So I can see that part of it. But why would there be any incentive once the last Bitcoin is mined for anyone to keep on verifying the transactions? Or does it then just shift to a different type of a program where you're verifying transactions so you can continue to keep the system going? I've never understood what happens when the incentive of the mining is over.
Yeah, I mean, look, 3 years is a general rule of thumb. I mean, that 3 years comes from typical amortization of your IT equipment as a general rule. The machines are running full bore 24/7. So, things will inevitably break down. But after that 3-year point, you, at the very worst case, will have doubled what you put in, and you know, that's assuming that you're buying at the highest price and paying, you know, the highest amount for your operation to be ran. So, you know, there's still considerable gains that you can make up to that 3-year point, and after. I mean, you know, we know of machines that have run for many more years than 3. So it's not a hard stop. Let's put it that way. What happens after all the BTC has been mined? Well, obviously nobody knows. We can only speculate, but it would go more towards a transactional based business. I suppose the idea would have been that BTC becomes the one world currency, and if everybody is using it, you know, why do we have MasterCard and Visa? Because they're transactional processing businesses. So there will be probably, you know, a handful of bigger players left in the game with, you know, super mining farms or mega mining farms that will be processing the world's transactions, I suppose.
Wow. So, but in the long run, we're all dead, as an economist
Yeah, of
said.
course.
So none of us will
Yeah.
be here to see what it looks like. But it doesn't mean that there isn't a lot of opportunity in the meantime. Thank you both for helping to walk us through and understand this. And it does sound like there's opportunity to be had, not just internationally, but also in Canada and in Alberta in particular. Again, thanks for your insights today.
You bet. You're welcome. Thank you very much.
All right. Let me tell you who it is that we were talking to. We had Art Matt, who is the CEO of Nectar ACS. He is in the Edmonton area. And we also have Phil Harvey. And Phil Harvey is the CEO of sorry, I've got to look at my writing here. CEO of Sabre 56 Bitcoin Consulting Services. We reached him in Dubai. So there you have it. Everything that you ever wanted to know about Bitcoin mining and how to get into it and the opportunity for it as well. So as I mentioned, we do have another segment coming up a month from now, because one of our members is an investor in a multitude of different altcoins, alt currencies. And so we're going to talk to the person he looks to as an expert for how to identify a coin that might have value, that is a platform that has the use case, but is outside the Bitcoin realm. Bitcoin is pretty firmly established, I think, as a store of value, but there are others that are developing as for different transactional reasons. And we'll see if we can get into that a little bit. Hope you enjoyed this. We'll be back again next week. I'm Danielle Smith. I'm president of the Alberta Enterprise Group.